Yeah, my name's Yale Simpson. I'm the co-chairman of Extorre, and I'm giving today an update on where we're at with the company. On April the 2nd, we put out PEA-3, that's Preliminary Economic Assessment 3. And that's a real milestone for the company, and that's why I wanted to do this kind of interview update to bring you up to speed. Cautionary statement, this is very important. In a PEA like this, you have different categories of resources, and in fact, in this PEA, we have inferred resources, and those bring to the study an element of a level of risk that you should address and read the cautionary statement appropriately. Highlights of what we put out: flagship Cerro Moro property, well known to investors. The study that we put out is modeling what this project looks like as a potential mine. That's not to say that we made a decision to mine, it just shows what it's like, would look like as a potential mine. We're looking at a 9-year mine life. We have an environmental approval for 750 tons of ore throughput per day. In the situation here that with us modeling a bigger project, we need to go back into the permitting, and I'll talk about that later. So what came out of it? The study showed 248,000 ounces a year of production. That's gold equivalent, and that's for the first 5 years. And I'll clarify that point. Gold equivalent, what we mean there is there's gold and silver, both which can be sold in what we call the doré product. In fact, over half the value is silver. So we use gold equivalent just so that we don't have to break it down to 120,000 ounces of gold, the balance being silver. Now, the other point that came out of it is the cash cost per ounce, as we call it. This is the mine site cash costs, are $303 per ounce. Again, gold equivalent, taking in that silver credit. Startup, based on our modeling, is 2014. That's based on all other things, access to capital, et cetera, et cetera. When could the project be in production? 2014. Capital costs, what are they? There's in fact two kinds of capital costs, direct and indirect, and you can see the number. The direct capital cost, $207 million, plus you'll see about $40 million in VAT, which is recoverable. That's your value-added tax. Then there's the indirect costs. Those are our owner's costs. EPCM costs, as we call them, to $37 million. Let's just have a look again. Now, where is Cerro Moro? It's in Patagonia, the province of Santa Cruz. Close to the coast, there's a town, you can see it actually on this graphic. You can't quite see the town. I think it's under the word Cerro Moro. It's, the red dots show all of our projects from Don Sixo to the north all the way down to Cerro Moro. We are a big landholder. And Cerro Moro as a potential mine is near other mines that are in production. You can see Cerro Vanguardia, which is Anglo Gold. You can see Manantial Espejo, which is Pan American Silver. It's a silver mine. You can see Cerro Negro. That's under construction. It's owned by Gold Corp. And then San Jose, which is the Hochschild McEwen mine. So in a mining district, this is kind of the little Nevada of Argentina. All of those projects known, they're all high grade by industry standards, but some of them are silver dominant. Here's the resource. We put this out in November. I'm just putting this out there because this is the background of what went into the resource. The actual amount of gold, you can see the indicated resources there of 1.4 million ounces to round it off. Again, gold equivalent. The important thing being the center column there that shows gold equivalent grade at 17.4 grams. That's high. High grade in the industry is usually anything above about 3 grams per ton. You know, as a segue, the average grade for all gold mines, the average grade that's being mined today by the industry is about 1 gram per ton. So obviously when you're looking at resources of 17, it's remarkable. Then there's the lower category resources inferred. And with respect to these, you can go and look at literature on the breakdown between measured, indicated, and inferred resources. But you can see the inferred. of another approximately 1.1 million ounces, and you can see the grade 6.9 grams per ton. Out of the total resources that you see on this table, about 75% of it comes into is the net production that's being modeled by the mine, all right? By the potential mine. Now, where does it come from? At Cerro Moro, there's a whole series of zones that have been drilled so far. They're labeled on this particular diagram. You'll see them named Gabriela, Esperanza, Escondida, Martina, Zoe, etc. So you can see, and these are 1 kilometer squares, so you can see you'll be mining in an area, and each area you'll be trucked from. You're talking about areas up to 5 kilometers away being mined. So let's kind of look at this in a bit more detail on the development program. The study we put out we had a number of contributors. This is the PEA-3, as we call it. GR Engineering Services is an engineering company out of Australia who specializes in underground mining, and this they had their badge on a good part of this current study. In fact, this kind of underground equipment you see there is the kind of equipment we'd be using at a potential mine at Cerro Moro. The PEA, here's the summary. I kind of went into it in the introduction. You can see the 9-year mine life. You can see us modeling 1,300 tons per day. That would be this 9-year project, and so the design work will be modeling a treatment plant of that sort of size. You can see the production rate that I referred to, and in fact, here is the breakdown of the 248,000 ounces between gold and silver. You can see it's almost 50-50 between the two in terms of value. You can see the total ounces recovered. That's what I was referring to before. When you took the total indicated and inferred ounces, how much of that comes into this as net production? You can see it's 1.8 million ounces recovered in this study. Capital costs, as I mentioned before, there they are. The cash costs, as I mentioned, $303 per ounce gold equivalent. This is your direct on-site mining costs, all right, related to the ounces produced. So, and the financial summary, payback of that capital is 24 months. That's at a 5% discount. You can see the pre-tax internal rate of return, 63%, very robust by industry standards. You can see the after-tax rate of return, just short of 50%. What's the NPV? And this is the kind of standard way of valuing these projects. The net present value, you can see at a 5% discount, gives $737 million. You can see the after-tax NPV of 463. And there's the metal prices we used, $1,320 gold and $26 an ounce silver. Look at that number again, because today with gold over $1,600 and silver in the order of $32 an ounce, you can see, well, what would these numbers be if you ran them at today's price? In other words, if you're in production today, how would this look? And obviously it would look dramatically better. But in a study such as this, you tend to discount the prices. This reflects about a 20% discount on current prices. So what would the mine look like? You can see here, again for scale, you can see on the right-hand side, you can see the scale bar, that's 1,000 meters or kilometer. So you can see there a number of areas for mining. In blue, you see the open pits. These would be like slots, if you like, fairly steep walled. You just peel out these veins that typically you can see run northwest, southeast. And then the material that doesn't have any gold, silver in it would be stock, what we call that waste. That would be stacked beside the open pit in each case. You can see the red lines are the series of roads that would link and bring down to the treatment plant, or the process plant that you can see on the bottom left. This kind of an operation is common in this part of the world, in Santa Cruz province. It's very similar to what AngloGold Ashanti are doing on their Cerro Vanguardia mine west of us. A series of roads joining up these pits. Now, some of these pits are also accompanied by underground mining, and I'll show you that on the slide. But that gives you the layout that's part of this conceptual study. So what looks at it from a mining point of view, this is a close-up now of the Escondida zone. just to give you an idea how it translates into mining. You can see it blue, but that's a 3D depiction of the open pits. You can see they're long, like trenches to take out the veins. That's really to accomplish rapid cash flow. It's much quicker and more economical to do it from surface, but at a point, you need to go underground. And then you see here, the green are these mineralized zones below the pits. And you can see these series of spiraling roads. These look like a underground car park where you spiral down into various parking levels. Well, in this situation, you spiral down into various mining levels. And you can see the amount of development it takes to pull this ore out from underground. So you can see that Loma open pit, in fact, you can see on that one, it doesn't have any underground. It's all being taken from surface. So that is the model for it. It doesn't show here on this particular graphic the Zoe and other zones, but this is how you do it. And to get into the underground of Escondida, there, like in the Escondida, on the right-hand side, it says Escondida far west. That's what FW means, open pit, underground. We anticipate starting the access decline, in other words, the spiral into it. We anticipate starting that in the next quarter. So that'll be the subject of us making further announcement when we decide who is the best engineering firm. Those kinds of what we call them underground declines are done by contractors who specialize in doing that. So to get that part of the underground ready, you'd be beginning that in the next quarter. So what's the production profile look like? We would have production from a number of these areas. The beautiful thing about an early stage mine like this is you have a lot of flexibility as to where you pull material from. You can pull it from any of these open pits. You can sequentially do them. The idea is to maintain a blend of feed to maintain your, what we call the head grade for the plant. And this graphic shows for the 9 years that we're modeling at 1,300 tons a day, just how much gold and silver comes out. And you can see the two ratios there. And that's this 246,000 ounce gold equivalent for the first 5 years. And then you can see as the project runs out of the very high grades, you see this tapering production profile. And to maintain that profile up at the 250,000 ounces a year, right, you need to continue to replace, if you like, probably about half of your production, so maybe 125,000 ounces gold equivalent a year at those kinds of high grades, and then you'd see production profile continuing. And that's an important part for us because 4 drills are continuing on the project to continue to lift that profile into the later years. And so what is the conceptual development schedule? And I'll make the point here is that we haven't yet pushed the button to say, hey, we have made a mining decision. We're not there yet, okay? Where we're at on this is now that we've got that study, we have the basis of doing more detailed engineering, refining our modeling, what have you, get some permitting done, so I'll go through it. So we're not there yet in terms of a production decision, but we're certainly moving that way. If you look at the development schedule here, you'll see discovery drilling continuing through this year and into next year. And that's really fundamental as a value driver. It accomplishes that, what I was saying, maintaining that 250,000 ounces a year profile, pushing it out. And if you make significant discoveries, contemplating increasing the size of the operation should those discoveries come in. In other words, find us another Zoe, find us another 2 Zoes. So delineation drilling on new resources is continuing. What we mean by delineation drilling is on Zoe, for instance, we still have, I think, at least 1 rig working on delineation, in other words, infill drilling for potential mine planning purposes. We need to put out a new resource estimate. As we continue to do this delineation drilling, we will be upgrading some of the inferred resources into the higher category. That will, you can see, so the latter part of this year, we anticipate a mineral resource update. You can see a mine economic study, PEA-3, well, that's come out already. And you can see our environmental impact assessment revision. And what that means is we call that an EIA. We have an approved EIA already for the project at 750 tons a day, as I said before. But what we need now is to update that to the 1,300 ton per day approval. And we see ourselves lodging that application this quarter. We're into April here, so I'm saying April, May, June quarter. And typically speaking, for other companies and the information we have, it's about 2 to 3 month timeline for that approval to come through. We think our level of documentation will be at least as high, or higher, I should say, than what we had the last time, and we don't anticipate any significant risk factor associated with that. So you can look at mine financing. What we mean by that is putting the various parameters in place that allows us to draw capital for the down capital for the project. In other words, what combination of debt, equity, streaming, there's a whole series of opportunities there for financing projects like this. And over the next 2 quarters, we will nail down what are the best options for moving on with the project. Development decline, the next item I mentioned that at the Escondida Far West, you can see us this quarter moving into that decline process. That doesn't cost, these declines cost in the order of 25 to 30 million, but you don't pay for them up front, you pay for them progressively. So that just becomes a monthly burn for the project, and we see that starting shortly, or at least it is the announcement of the contractor to do that. The decline development at Escondida Central and East, and you can see that into 2013. What that means is that there will be 3 declines going into the project. These are these underground spirals I referred to, and the other ones will kick in the first half of next year. You can see all the way through this year what we call advanced engineering and or construction. And I said we haven't made a development decision yet, but there's a lot of engineering to continue to go into that project. It really, the construction side depends on us continuing to de-risk the project. It requires us having the permitting in place, and back to that higher item as to which kind of mix would you contemplate for this project in terms of financing it. Mine commissioning, you can see into at the end of 2013. That's mine commissioning. What we mean by there is not necessarily full-scale production, but it is the construction is finished and you're commissioning the plant. And of course the community and social plan and the environmental continuing through, that's a continuous process, especially on the community relations side. In terms of, I mentioned before, the drills are continuing. We have showed this really busy plan for some time. What it shows is a grid pattern. You can see the north-south squares on it, north, south, east, west. Each of those squares is a kilometer. And this is the plan that we've shown for years, except we keep changing the priorities. But it kind of tells you where the drills are at any point in time. And so when you look at it, you can see, well, of the 4 drills, where are they? The emphasis of that drilling is to find new mineralization. In other words, find another Zoe, find another Escondida. And you can see us continuing to drill. Number 1 target is still Zoe, but you can see other names there coming in, like Martina and what have you, because we're drilling other targets. And you should stay tuned for announcements on the drilling because we tend to make them about every 2 months. So you can see all the plus 30 targets as they're named. Just to put it in perspective, had I been giving this presentation a year ago, the number 13 target was Zoe. And you can see Zoe is continuing to be number 1. But as the exploration goes through, follow this space, because we can pop another one of these. It might be ranked number 22 becomes our next number 1 target, simply because there's so much exploration potential remaining at Cerro Moro. So what's the news flow going forward? PEA-3 is now out. That's your second item here on this slide. Cerro Moro certainly continued drilling announcements. We're becoming close to being due just on a for how many these press releases we get out of here, so it's not far off. The start to construction of the mine decline, I mentioned that before. That is really important. That's kind of the first turning of the ground, if you like, with respect to advancing this project. The size of that exploration decline, as we call it, is such that it could be converted or equipped down the line for production. In other words, you could haul a rock out of that for mining purposes. So that's the first real milestone towards development of the project. You can see the application for a revised mining permit, Q2, so, and the potential for other discoveries. The Falcon and Pantudo properties, it's kind of, again, watch this space. These projects are nothing to do with Cerro Moro. They're some distance away. We have announced the discovery in the past of what we would call ore grade mineralization. And I think that looking forward that later this year, I would be an advocate for returning to these kinds of projects, because we've really focused, since Zoe was made, this discovery was made, we focused on, okay, Zoe discovery, let's get it into a mining scenario. Well, we've accomplished that. And maybe it's time we start looking at these other properties because they sure got some scope to them. Mining analyst coverage, I'll leave this up here. These are analysts who cover our space. Some are in the US, some are in Canada. They do comment on where we're at, and some of them, in fact, give price targets if you want to approach them to go ahead, fine. So that's the presentation. I hope it was beneficial to you. I've enjoyed giving it, and any questions you have, you can call our offices here. You can talk to Rob Gray, Marina Trazzolini, or myself for an update, and we can even connect you with our CEO and COO down in Argentina. Thank you.